Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Plug Power, ticker symbol PLUG. And so here I am recording this on the morning of Tuesday, September 3rd, before the market opens, and Plug is currently trading about a penny lower than it closed on Friday, August 30th, closing out the month at a price of $1.88, being down about 3% on the day, that is Friday last week. And so I wanted to go over something in the chart that does stand out to me as a good way to be accumulating shares at a discount. It's something that I've done. It did serve me pretty well, but now it looks like the discount's even greater. And so I wanted to go over that. And I also wanted to go over the MACD here, which is something I pulled up in last night's stream. And I think that's something I'm going to be using in videos moving forward because I do think that it is a pretty good indicator for when, stock price can be rolling over. And with it turning red now, I actually don't think that the bottom is in just yet for Plug, but I do think this strategy could be used for picking up shares at a discount at prices we have not yet seen. And so, before I get into that, I did just want to go over, this double bottom that I'm talking about. I do have this orange line here drawn at 186. We did not see it over here on the daily chart, but we did test it on Friday, hitting a low of 186, but then closing 2 cents above that. And so why do I have that line there? Why am I saying double bottom if we don't see anything on the chart over here? And so the reason why I have that line drawn up there going back to this date, earnings day, August 8th, is because during the pre-market, Plug actually dipped down to that level, and so that stood out to me as a level to be paying attention to. So if I switch over to the 1 hour time frame, we can see that 186 was hit on Friday towards the end of trading. But then if we take a step back, we can follow that horizontal line back to, the 8th, the morning of the 8th, when the stock price did hit 186 before market opened and then bounced. So that is why I have that level there. And it does seem like we have formed a double bottom. But I do want to note some things that on the daily chart, we did break below the prior low of 191. Like I had mentioned, that MACD does look like it is flipping to red. And so what I would like to see in order to, signal that the bottom is clearly in is for the red candles here, that histogram of that MACD to start becoming less negative, suggesting that the bottom is in, it's rolling over, and then price could start to go up. So I don't think we're there just yet. I do think that the price will be going a little bit lower, and levels that I think it could be coming to. One of those levels, really based on this yellow Fibonacci retracement here, is going to be the 1618, and that will be bringing price down to around 164. It sucks to think that this might be coming down around 24 more cents. But that's just the level that I do have on there, and it does potentially correspond with this white downtrend. The intersection of those levels would be around the middle of September. So, maybe over the course of the next couple of weeks, we see maybe some consolidation up here or some fading. But ultimately, I think a couple weeks from now, we might be at 164. And so that white downtrend, if I do take a step back and then adjust that axis here so we can see the full picture, is based on these two pivot points that I have drawn here, one being the low from July 2nd and the other being the low from August 12th. We did get, a test of that level a couple times over here, and so I do think that we might be retesting it again before we bounce, as when we did hit it over here, we did bounce up to fill this gap here at 232. That also corresponded with this level that I've marked at 226.3, that red line there, and this prior low. Moving up to that level, testing it, getting rejected from there, and just to show where that red line comes from, that looks like it's kind of a trend line, but It does, appear to be a horizontal line since the number is over here. And that, is based on the low that was hit on January 18th of this year. We did bounce from there, pull back to it, bounced a couple times, but then over here, it looks like on August 2nd, we did break below it. And then also, you might notice I have this other blue line here that is dashed. It is a gap that is not yet filled. That is at 292. So maybe we make our way up to that. But like I said, I do think the stock price is going lower, largely because of this MACD signal. I don't think that it has really found a bottom yet. But, the thing that I wanted to go over that could be, a nice way to pick up some shares at a discount, it's a strategy that I have used for the upcoming options expiration on September 20th. And right now it's actually cheaper than what I got it at. So I'll go over that in just 1 second, but that is really just based on this pre-market low. I saw that and was like, oh man, it looks like it's bouncing. It'd be nice to pick up some shares at 186 since we haven't seen that on the daily chart. How could I do that? I could do that by getting a cash secured put. And I think that could actually be used for getting shares at 164, even though we haven't hit that level yet. And so I'll go over that now here, looking at the options table. So here I am looking at puts with the expiration of September 20th. And so I was looking at the strike of $2. And the reason for that is because price was right around $2. And, we can see that here looking at the chart, price up here around 226, a little bit higher than that. And so I placed an order here in this options table to sell a contract, a put, with a $2 strike, and I had a limit of 14 cents. So that means I would be getting 100 shares at a price of $2 minus that premium of 14 cents. And so then my share price for 100 shares would effectively be 186 because that's $2 minus 14 cents. And so that was at a time when price had not been at 186 on the daily chart. And so that order was actually filled on the 27th here when we hit a low on the day of 205. So price is still above $2 a share, but that order got filled. I sold a cash secured put for 14 cents with a strike of $2. So if we close below $2 a share on September 20th, I get 100 shares at an average price of 186. But as you can see, that premium is now increased. It's now 20 cents. So if one sold a cash secured put with a limit of 20 cents, that would effectively be getting 100 shares at a price of $1.80. And so that is a price we have not seen anywhere on the chart thus far. So, I think that's a great discount. I think it's a great way to pick up shares. But, I did mention that price could be coming down to 164. So a way to pick up shares at that price, even though we have not gotten there yet, I had just shown a way to pick up 100 shares at a price of 180, assuming that the price closes below $2 on September 20th. And so a way to pick up 100 shares at 164 would be to set a limit sell at 36 cents. So $2 minus 36 cents is 164. And so that would just have to drop, 16 more cents. And then if that gets filled and price closes below $2 a share, that would be, picking up 100 shares at 164, this level that I see here. So I think that could be a really nice way to get a discount. But if that doesn't happen with September 20th coming up, $2 being the strike here, and that needed to drop 16 more cents. Another way to do that could be looking at the next monthly options contract, which would be October 18th, looking at the $2 strike, and that's at 28 cents. So it's not really unreasonable to think that price that this premium could be going up to a price of 36 cents. That's not as far of an increase as it would be with the September 20th strike. One would have to hold that contract a month longer until October 18th, and Plug's price would have to close below $2 a share to pick up those 100 shares at 164. But Either way, that would be picking up a premium of 38 cents, which translates to $36. And so even if it did close above $2 a share on October 18th, that'd be a nice way to make 36 bucks. So not really too bad there. And so, I don't have an order placed for that now. I'm going to wait until September 20th to see if I get my 100 shares at a price of 186. And if I do, if price is still lower, I will probably place an order to sell another cash secured put, but this time with a limit price of 36 cents and a strike of $2 a share expiring on October 18th to then pick up 100 shares at this even greater discount at 164, which we have not yet seen on the chart, but I suspect we will over the course of the next couple weeks. So do keep that in mind. Do be cautious with this one. I do not think the bottom is in just yet, but I do think that's a pretty cool way to pick up shares at a discount, considering that on the chart we have not seen 180, but considering market open for today on September 3rd, we could be picking up, 100 shares at 180. So like I said, I think that's pretty cool. I think that the bottom is almost in, but not just yet there. I think that there's more discounts to be seen, but, I do think that there is gap to the upside right around $3 that maybe will be hitting before the end of the year. So it could be a pretty nice swing there. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching and have a great week trading, guys. Take care.